Welcome back, guys and gals. You know what time of day it is. Boy, it was fast since we last saw you guys. Joseph James here. I've got my buddy Marty Errico from Traders Audio. I'm JJ at School of Trade. I'm here today with you guys to provide you with the very unique screen-to-floor morning prep. That's right, we're looking at crude oil futures this morning. We're going from the screen here in Los Angeles. I'm a technical analyst. I'll be providing you with a top-down technical approach to trading crude oil this morning. My job is to analyze everything from dailies and weekly charts all the way down to the overnight session, including London. My job this morning is to anticipate the direction at the open, because if I can anticipate direction at the open between 8 o'clock and 10 o'clock this morning, I can find those high percentage trading opportunities starting at 8 a.m. Very important we remember, this technical approach will also use some analysis from the pit. And I'm very excited, as I am every morning, to have the luxury of being able to work directly with somebody on the trading floor. This is a very unique scenario, guys. Most of us do not have this vantage point, so to speak. So we've got Marty Errico. He's a specialist on the pit analysis this morning. He's got his feet on the ground on the NYMEX exchange in New York City, all the way across the continent, and he's looking at direction, divergence, looking for any market internals, taking a look at the option prices we have in the floor, and of course, those very important pit session levels. We'll be taking a look at all of that together today and some. All right, let's get started. First things first, let's jump into some charts. Now, I'm going to start first here this morning with a 4-hour chart. We usually look at a daily or a weekly about this time of the week. It's a Wednesday. Say a Wednesday? No, boy, today's a Thursday, isn't it? I should have known that. Almost Friday, almost out of the week before quad witching. We'll talk about that next week. Here we are on a 4-hour chart. Now, not sure if you guys recall this, but a 4-hour chart, in my opinion, is the best blend between a daily or weekly, right, a slow anchor chart. It's a great blend between a slow anchor chart and a much faster anchor chart. You're going to see me go from a daily down to a 4-hour down to a 60-minute. There's a little bit of rhyme and reason to that, right? We get a little bit of a reason why we do that. We want to get a little taste of everything. On this 4-hour chart, boy, can we see some big clues. What do we see? Well, if you recall, a few weeks ago, we were talking about this bearish channel. Remember this old bearish channel? We got lower highs. We've got lower lows, right? It was a little bit sloppy channel, but we were able to put it all together. And then we made this remarkable prediction about 2 weeks ago, right, that when we broke out of that channel, we were going to run right into this channel resistance. Now we use, if you recall, we use Fibonacci to calculate the exact equation, right, for this channel to predict its reversal zone. So the bear channel just kept on giving. We used the bear channel a few weeks ago to sell short, but now, of course, we can see that bear channel reversal zone has also held very, very well. Now, since we know that reversal is above us, we know we've got some levels above us starting at 96.49. We can also see another very important clue, and that is the short-term price wedge. Now, potato, I call it a wedge. You may call it a triangle. You may call it a flag. No, JJ, it's called a pennant. It's a pennant pattern. Whatever you want to call it, guys, doesn't matter to me. I call it a price wedge because as we wedge, we have lower highs, higher lows. And remember, this price wedge tells me a ton of important information. The first thing this price wedge tells me is the market personality. What's the market personality of a price wedge? Indecisive, right? When I see a price wedge, the first thing that comes to my mind, I come from New England originally, right? Brr, right? Freezing up there. That's why I live in Los Angeles. People ask me why I live in Los Angeles. Are you kidding me? Have you ever lived in New England before? So we know in January every year, it's freezing cold out, and they have this club called the Polar Bear Club that jumps into that frozen water right off the coast of southern Maine, right off the coast of Gloucester, Massachusetts, right? And every time they film it, and it's so funny, you see these people jumping into that freezing cold water and then, whoa, get me out of that water, right? They jump into the water, whoop, right? Get me out of that. It's freezing. No, please, you go first. No, you go first. No, please, I insist. No, you can enter the water first, right? It's like a bunch of 8-year-olds being pushed in the water, right? The first one in, whoo, that's cold. That's exactly what I feel like. That's exactly what comes to mind when I see a price wedge. I think nobody wants to be the first person to try to blow out of that wedge. Nobody wants to be the first person in line to sell the lows or buy the highs. Something needs to happen this morning in order to give these buyers the confidence or the sellers the confidence to really push this thing around. Now, we've got some major news this morning. I don't know if you've checked the economic calendar this morning. It's posted on my blog, by the way. I've got jobless claims, retail sales. What else do we have this morning? We got 10 o'clock news. Bottom line is we've got some major news coming out here right at 8:30. That might be the external stimuli. That might be the old push behind you, right, to get you into the pool. That may be what we need to get this thing going. The first thing this wedge tells me is market personality, right? Like a bunch of 8-year-olds jumping into that cold water. Then, second clue it tells me, look for the fake out breakout. Now we know, because of the market personality, two-sided trading, two-sided trading. I'm buying lows, I'm selling highs, and most importantly, this is not where I want to be looking for the high percentage trades today. Right in the middle of any range, and a price wedge is even more important. Why is it important to skip a price wedge in the middle? Let's talk about that for a second. Why is it so important that we avoid trading in the middle? Well, think about support and resistance. What is support and resistance? No, it's not a brick wall. No, it's not where price will reverse. No, support and resistance is simply where we expect traders to react. At resistance, we expect the sellers to react bearishly. At support, we expect the buyers to react bullishly. Well, remember, those buyers aren't going to buy above the lows or above the support. Those sellers are not going to sell below the resistance. So what happens is we have this area in the middle where the buyers aren't playing ball, the sellers aren't playing ball, and we're left playing ball with each other. And so we have no idea where price will go in the middle of that range, and therefore, because we're professional traders, we need to sit on hands, wait for price to hit the lows so we can buy them, wait for price to hit the highs so we can sell them. Right? That's where we're going to get the most amount of liquidity. That's where we're going to get the most amount of participation. We're not going to get that in the middle of the range. Now, the third thing this wedge tells me, what were the first two? One, market personality. Two, fake out, breakout, right? Buy lows, sell highs. And guys, I will sell highs as high as 96.49. I will buy lows here as low as 94.46, as low as 93.75. Guys, I'll use all these levels above and below the wedge. The third clue, the third thing this tells us is if we happen to get down into the narrow part of this wedge, that's when we know something big is coming, right? Almost like a top that's been wound up really tight, right? Almost like one of those, remember those in the old days, they had those little, those slinkies that would pop out of the can of, can of worms like that. It would bam, right? That's what we can expect at the end of a wedge. We're not quite there yet, but keep an eye on this 4-hour chart of crude oil because I can definitely tell you this is coming. This is coming. We just rolled over on the dollar this morning. We're expecting rollover on crude oil on the 19th, I believe it is. So we're not quite there. We're already there on the dollar for rollover. We've got the pit rolling over here on crude. Something is going to happen here soon, guys. Something's coming, and this price wedge gives me the first big clue of the morning. I will expect two-sided trading. I will be buying support. I will be selling resistance, and I will be looking for reversals above and below me today. All right. Now that we know what the 4-hour does, right? Boy, I'm freezing just thinking about that cold water those lunatics jump into. Here's my 60-minute. Now, the 60-minute chart you're going to see here, 60-minute chart, another kind of easy clue. Bull channel. This bull channel is a walk in the park. The bull channel is exactly what we've used to give a bullish tone to all of our guidance this week. Now, if you rewind the tape, we've been accurate about buying lows. Well, today's Thursday. We've been 3 for 3 this week so far. So far, so good. This morning, though, look where we are. We can see right here, again, we're not at the lows of this wedge. We're not at the lows of this channel. This tells me we still have some room to go lower before I'm going to start looking for that buy. Right now, we can easily see we are in the middle. This is why I love this new indicator we just developed. We call this the zones indicator. Demand is green, supply is red. We can see we have supply overhead. We have demand below us and this little teeny tiny open space here. Two-sided trading with a bullish tone to it. Two-sided trading with a bullish tone to it. Bull channel gives it away. Final chart here this morning, now that we have our 60-minute, and by the way, these will all be up on the blog here momentarily. Let's now jump over now to our crude oil 5-minute. Let me see if I can find that crude oil 5-minute here for us. Buried that here somewhere behind these charts. There we go. All righty. Our crude oil 5-minute chart, boy, does this put some more nails in the coffin for those buyers and sellers. What an interesting scenario here this morning. The 4-hour chart told us range-bound, two-sided trading. The 60-minute chart told us slightly bullish sentiment, but again, two-sided trading. And what do we see here on the 5-minute? Boy, what a narrow range. Look at the size of this overnight trading range, guys. This is nothing, right? This is nothing. This is a very, very narrow range. You can see we've only been trading in only 60-cent range here this morning. That tells me one of two things. A narrow range coming out of London, a narrow range coming out of overnight. It tells me one of two things, guys. One, it tells me we may be consolidated, sideways, two-sided, indecisive, waiting on something. The second thing is this thing might just be winding up here for a big breakout. All right, we know this personality could be just consolidated, but at the same time, we also know this leaves the door wide open for the news this morning to come out and for price to at least here to jump up to 96. I would expect 96 would be an easy target here for those buyers, right? So look for a test of 96. If you're a bull this morning, we just tested that 95.33 support right in the middle of that range. This could easily be a nice symmetrical move as we go higher up to that 96.02. Again, as I've said, I'm going to be focused on selling at the highs and buying at the lows. So for me, let's assume price rises. Price can move three ways. If price rises this morning, I will be looking to sell the reversal zone. I'll be looking to sell the resistance at 95.86. I will expect to see the best bounce this morning at the 96.02, somewhere around here. I will expect that to be a very good reversal level today for us. We do have some more overhead. 96.26. 96.26 is very, very close to that previous high of day. Now, if you recall from yesterday, right, go back and rewind the tape. Yesterday, I told you about a range of prices, and that's exactly where we got the reversal yesterday. Here's another one of those ranges, right, that we can easily expect to see a very easy reversal if we can get up there. All right, what gives it away is the previous high of day, the previous week's high, right? That's the high of the week last week. And then we have the reversal level number 2 at 96.28. So look for a brick wall of resistance. And of course, again, I'm always a big believer that you're really playing with fire trying to predict these breakouts. What I always do is I always just wait for price to get up. I look for that big pin bar, right? Look for that big candlestick wick that fails to close above it, and then I'm short getting right back down to it. So I'm looking for levels above me. Again, I'll put this chart up on the blog for you. If price happens to trade sideways, you know, price can move up, down, it can move sideways. What if price moves sideways? If it moves sideways, I'm sitting on hands, right? Sitting on hands. If this thing moves sideways here this morning in the middle of this range, I've got no choice but to sit on hands. If I'm a good scalper, if I understand how to read price action, if you know how to read divergence, if you know how to read price action, yes, I can sell highs, I can buy lows of this price wedge. But guys, I don't see this wedge holding very long. I don't see it holding very long. What I do see happening though is we'll probably end up using one of these trend lines, right? So for example, if we take off the downside, you can expect the reversal to use one of those trend lines. If we take off to the upside, right, the exact opposite. We'll see price take off to the upside, probably be able to use the trend line, right, for a profit target or another buy. So just be aware of that. We got major news coming out here at 8:30 this morning. So 45 minutes from now, I have a feeling this price wedge will be banged up a little bit. But again, this is a Thursday morning with lots of news. We'll have to wait and see what happens. As price goes lower, now remember, we saw a bullish tone to the market with that bull channel on the 60-minute chart. So I will be looking to buy here as the high percentage. Again, as price goes lower, I do have support here at 95.33. That still has not been officially tested yet. Guys, close enough does not count in day trading. It only counts in horseshoes and hand grenades. So we still expect price to test that 95.33 for a bounce. That bounce will be used for taking profit. For all you members out there who sold the reversal zone, that's your profit target. I'm not looking to buy there just yet. I will be looking to buy trend line low. I'll be looking to buy the 95.15. I'll be looking definitely to buy this reversal zone. Again, what I'm looking for is I'm looking for that pin bar, right, that goes into the zone, and then just as fast as it goes in, it reverses and comes out. That's what I'm looking for. I'm not putting a buy order resting on the reversal zone. I've got levels here in the reversal zone below me. I've got levels at 94.64, 94.46, and 94.40. Boy, isn't that a great little buy zone right there? Nice support right there, guys. That previous low of day is screaming at us. Buy me, JJ. Buy me, JJ, right? If we keep going lower, I've got 94.02, another previous low of day, another reversal level. Again, another hot spot here for a buy this morning. Once again, if we keep pushing lower, I've got plenty of levels here below me, and I'm going to make sure we put those up on the blog for you guys as soon as we hand it over to Marty. All right, guys, I'm seeing a bullish sentiment here long term. I'm seeing a short-term sideways sentiment, two-sided trading. Buy those lows, sell those highs. Marty, what are you seeing over there, my man? Thanks for joining us here today. Am I on the right track? What do you think? Am I off my rocker this morning with this two-sided trading? And what are you seeing on the flip?
So, how you doing, JJ? Good morning. So,
Morning.
really across the board, I'm looking just for, morning to you, I'm looking for very simple levels, right? 95.50, that's all I'm looking at. 95.50, we can open above it. I will continue to stay bullish, and I will continue to keep an eye. Now, listen, I call it super resistance, man. That 95.39, like super resistance. We have a weekly high. We had Monday's high. We have the last week's high. We got R2 sitting at this level. We have, obviously, yesterday's high. So super resistance up at 96.39, big time here. So I would really watch out for that level. If we can break above it, I mean, that can give me a conviction to get up. We can definitely trade higher if we get above that level, but it could trick you out, and you can really end up just be sitting in a resistance zone. But I do agree with JJ on that point that we have super resistance up at 96.39. So first and foremost here, let's look where we are this morning and kind of see where we are at, ladies and gentlemen. We're going to start them off by taking a look at crude. You can see we had a decent trading range yesterday. It wasn't terrible. I mean, we ended up just kind of sitting tight in a range for the most part of the day after making our highs early in the morning on crude, right? So we made our highs nice and early. We have been watching crude just kind of settle around 95, 96 yesterday. And right now we're currently trading at those 50s. Now those 50s are what a lot of floor guys have been looking at with me. I kind of sit down, had some coffee with some traders this morning, and we were talking about just levels in general, direction in the market. Can we hold? Can we get up to $100? We're talking, you know, we're just having fun. So I asked them, and they're saying, listen, if we can hold above 95.50, I'm all in. You know, they'll buy the 95.50. If we can close and settle above 97.25, 97.5, if we can stay above that 97.25.5, just not for a day, but for like 4 or 5 days, yes, then we have a shot to get up to 100. But does it happen? Who knows? This news is going to hit the board at 8:30, and that's what's really give us an indication whether we trade up towards highs yesterday or we kind of trade down towards lows tomorrow. So let's continue on, and let's take a look at your RBOB heating oil. RBOB this morning slightly higher, trading at around $2, 281.25 this morning, and I want to have to see exactly what happens into. Hang on one second, guys. All right. I want to see exactly what happens here into the opening bell with your RBOB products. Again, we've been noticing the crack values and the spreads in these between RBOB and heating oil, RBOB and gasoline have been starting to widen out just a bit. So I'm watching the multiple market divergence, crude, RBOB, heating oil, all trade higher, up in the high prints. We're sitting right in the middle of the range from yesterday as well. So let's keep an eye out for RBOB. Brent obviously trades in Augie now. Again, we are in Brent Augie contract this morning. So we have been in the Brent Augie, and we've been using for the Brent WTI spread Augie to July now. So the Brent Augie contract contract trades around 103.29 now, last print, and it's a little bit lower on the day. We've been watching just the Brent crude kind of ease out during the European session. Again, if you look at the crude in the European session, not a very wide range, and we're looking at the same exact thing for the Brent in their own session, for God's sake. So yeah, not a big range. Spreads this morning here have been just starting to tighten up just a bit. I'm looking at the calendar spreads, and I do have an inverse here on all calendar spreads for July to August, July to October, July to Sep, July to Novi, all very tight this morning. It's very bullish now on the spread front. On the Brent WTI spread, I'm actually looking at it, and right now I got about 760, 788 on the spread this morning, and rather tight. So again, looking at all these indications right now, we are looking for higher prices. It is going to be a bullish little day here as I look at all my spreads and all of our multiple market divergence. So I'm looking bullish above 95.5, and it's really simple as that. If we can get above those 95 halves, I'll be glad to be buying. All right, talking now about natural gas real quickly. Let's take a quick look at it, and then I'm going to go over levels with you guys, and then we'll be able to talk a little bit tomorrow as we'll be coming into Friday. We can look at those spreadsheets, and we can look at all that information that I always post up for you guys. We do them on only certain days of the week, obviously, because it's when the news is coming. So, all right, let's take a look now at your natural gas. Well, we looked at a break above the 375s yesterday in natural gas, right? We got above 375. We were able to trade above 375 up to 378.90. So if we can stay above 375, hold that level, we'll make it up to 380, get a little bit of a retracement from the big inventory number. Look at the big inventory dip that we had. Fib that for me from high to low, JJ, and then boom, you'll be able to see the reversal zone. You'll be able to see that we could make it up just to a little bit of resistance, maybe 380, right? Then once we hit 380, once the number comes out, they're looking for a build of 96 BCF today in the natural gas number. That's going to be today at 10:30, 96 BCF they're looking for. If we do get above 96 BCF, we'll be selling. But personally, I think there was a little bit of demand because there was a 6 to 10 day weather forecast that came out saying that there were going to be warmer than expected temperatures here across the United States and in the western part of the country. The western 2/3 of the country will be warmer than expected, and the east part of the country where I live in the east coast, that's going to, east coast is going to be average temperatures. So still warmer than expected temperatures has been rising this natural gas, as you can see the last couple days from the 12th, we're talking June 12th, all the way up now to June 13th. First 2 days of the week, or first 2 days after the weather report, we're trading higher. So take a look at that. Think about that. Even though that we are bullish now, short-term bullish with that weather report, the natural gas inventory numbers will rule what happens today. Again, 96 BCF. If we do fall below 96 BCF and the number comes out below 96, we'll be buying. If it comes out above 96, we'll be selling. So it's simple as that. Above 96, sell. Below 96, we're buying. So I really think we're going to get a little bit of a less than expected build in inventories, and I'm actually looking to possibly look for somewhat of a buying opportunity. So again, let's get to levels, ladies and gentlemen. Let's rock and roll here. Let's look at levels from the pit session here for crude. We're going to take a quick look at your crude oil pit session from yesterday here, and then we're going to rock and roll over to natural gas. Alrighty, guys, so pit session levels for crude. Just a second here. 1 second, guys. All right, crude. 98. Now I got him here, guys. Sorry about that. 96.45, your high yesterday. Your low, ladies and gentlemen, 95.32. We close and settle the day at 95.96, which your close and settlement number. Net change of only 63 cents, ladies and gentlemen. Again, a range of about $1.13. And we continue to see here your open interest and volatility start to kind of just come out. We're watching volatility kind of get squeezed. Volatility, and also we've been watching your open interest start to get squeezed out just a bit. And if you don't know what that means, just telling you that shorts are possibly starting to get out of the market. Again, you're starting to see shorts come out. They get squeezed out, if you will. And that's kind of just evidence of what we try to keep a lookout for here in the market for general direction. Implied volatility ticks down to 21%. Yeah, we've been at 21% in the implied volatility. The OVX 2272, and we'll talk about the large strikes in a minute. Alrighty, guys. Let's talk about support resistance above below and those blue and red numbers here. Resistance above, I got 96.50, 97.04, and 98.17. I got some support down below at 95.37, 94.78, and 93.65. Again, those are going to be some nice level support resistance with the super resistance at 96.39, of course, and then yesterday's high, 96.45. So watch those levels, ladies and gentlemen. Now let's just quickly take a look at natural gas, and then we'll wrap it up, ladies and gentlemen, because I got to get ready for this news that's about to hit the board here, guys, at 8:30 here. Alrighty, guys. Natural gas pit session high from yesterday, 378.90. Low, 372.20. Close and settle at 377.70, which was a major level there, guys, that we gave you a couple days ago. All right. Net change on the day, 4 pennies to the upside, obviously here, 5 pennies to the upside. Sorry, 5 pennies to the upside. We were watching just a range of about 10 pennies or so yesterday. Decent range here, 10 cents altogether. Implied volatility, 33%. The vol index, 36.1%. Vol has been rising here as we've been going a little bit higher, so volatility rising. Let's talk about some resistance above, 380 even, 382.30, and 388 even. Support down below, I have 374.30, 370.90, and 365.20.
All right, guys, we'll get Marty back here as soon as possible here this morning. Hopefully everything's okay on his end. All righty. Well, it's 8 o'clock Eastern time here now. I want to thank you guys for coming in and listening in this morning. I'm going to make sure Marty's okay on his end. And in the meantime, I've got all of these levels here going up on the blog for you right now. I want to thank you guys so much for tuning in this morning. As always, it's great to have you all here. We are working hard to roll out this full product each morning. We'd love to get your feedback, what you guys like about the broadcast, what you guys don't like about the broadcast. Would you like to see anything added, anything removed, right? Do you hate my jokes? What do you guys like and what do you dislike? Give us some feedback, post a comment on the blog, send us an email. I'm JJ at School of Trade. That was Marty at Traders Audio. Marty, if you're listening out there, thank you so much for coming in and joining us. We know your busy schedule is always catch you running around there in the pit. And thank you all for being here today. We'll see you guys in about 23 hours and 30 minutes for a Friday edition. Don't forget, we've got major news coming out in less than 30 minutes. We also have quadruple witching right around the corner next week. So finishing up a very important week here. We'll see you guys tomorrow for a finally Friday edition of the Morning Prep. Have a great day out there, guys. Adios, amigos. Bye-bye for now.